gold and silver are going to go up eventually. And one more, and my thesis is one more printing round, and it's going to happen. A little bit deeper, what's going on in the derivative system? They make their moves in gold before the public finally wakes up. What makes the public wake up? Well, not the derivative markets, the supermarkets. That's what makes them wake up. These numbers don't really mean anything when the dollar doesn't buy anything. So, I mean, it's anyone's guess, but I do think that the ratio, at least briefly, will fall to 15-1, which is what I'm waiting for. And when that happens, I'm just going to buy a bunch of stuff with silver, and whatever I can't buy, I'll just convert back into gold.
The recent surge in gold and silver prices to new highs reflects the intense volatility sweeping global markets as geopolitical tensions in the Middle East and concerns over the U.S. election deepen. Last week, gold soared past the historic $2,700 per ounce mark, fueled by growing demand for safe haven assets amid conflicts in the Middle East and heightened fears of escalation, especially involving Iran. Silver has also seen a sharp increase, reaching its highest levels in over a decade. This surge is driven not only by silver's status as a precious metal, but also by rising industrial demand for green technologies. In the fourth quarter, silver has rebounded from its earlier decline, now aligning with gold's record-setting path. On October 22nd, silver prices jumped to $34.87 per ounce, up more than 43% since the start of the year and its highest level in 12 years. Financial journalist Rafi Farber noted that it's surprising how resilient gold has been, with no significant corrections in recent months. He said he's mentally prepared for a possible pullback, expecting that a drop of $50, $60, or even $100 wouldn't be unexpected. Farber also highlighted that silver may follow a similar delayed response, as seen in past bull markets. Current global events emphasize the crucial role of precious metals as a safe financial refuge. The evolving U.S. political landscape, coupled with escalating conflicts in the Middle East, is driving investors to reinforce their portfolios with gold and similar assets. At the end of this cycle, Farber speculates that silver could reach the hundreds or even thousands in value as the dollar loses purchasing power. He expects the gold-to-silver ratio to eventually fall to around 15-1, at which point he plans to convert his silver holdings into gold and make purchases with his silver holdings. As we dive into the video, remember to subscribe and tap the bell icon so you never miss an update. We value your thoughts, so drop a comment below and give us a thumbs up if you enjoyed the content.
What's surprising to me is that gold hasn't had much of any of a correction for how long has it been? I don't even know. It's been months. And on the one hand, like, I'm emotionally ready for a correction. Like, if gold were to go down 50, 60, 70, even $100 in some kind of like little crunch, it wouldn't surprise me, but it's not happening. And I looked at the commitment of traders in gold, right? And the worrying thing is that the bullion bank short positions are very near a record high on gold. But what I also noticed is that you go back all the way to 2008, 2009 to 2011, the strongest portion of the gold bull market of that era was after the 2008 crash, right? And then gold goes something from like 642 to 1923 what was it, from October 2008 to September 2000. So about 3 years. It goes from more than triples, about triples. And in those 3 years, the COTs, the commitment of traders, who's positioned what in the futures market, if you trust those numbers, I don't completely trust them, but I think they're basically accurate, maybe. They look very similar to now. And for most of those 3 years, the bullion bank shorts were at or near records for 3 years. So I'm saying, like, yeah, we're in a dangerous position where you could get people knocked out especially if they're in leverage or doing some kind of crazy trading strategy with options, which I never ever recommend. But those people could get kicked out if they're just trend followers or if they're hedge funds or something. But then again, we had 3 years of this from 2008 to 2011, so we could have that again, and we could just keep going higher from here, just like we did in those years. I don't really know. I'm not gonna try to play it. With silver, silver didn't really make a move until 2010, 2011. So 2008, 2009 didn't do that much. Same thing in the 1970s, like from 1975 to 1979, silver did basically nothing. And then all of a sudden, 1979, 1980, the last half of 1979 into the first 3 weeks of 1980, silver just goes crazy. That's a signal of the public finally waking up, right? The banks wake up, the financial players who see a little bit deeper what's going on in the derivative system, they make their moves in gold before the public finally wakes up. What makes the public wake up? Well, not the derivative markets, the supermarkets. That's what makes them wake up. Then they go for silver. So we're going to see that at the very, very end. And where silver is going to go in the very, very end, of that cycle in the hundreds, maybe even the thousands. I don't know. It depends. These numbers don't really mean anything when the dollar doesn't buy anything. So, I mean, it's anyone's guess, but I do think that the ratio, at least briefly, will fall to 15-1, which is what I'm waiting for. And when that happens, I'm just going to buy a bunch of stuff with silver, and whatever I can't buy, I'll just convert back into gold.
As major central banks around the globe initiate monetary easing and interest rate cuts, the appeal of non-interest-bearing assets like gold and silver is increasing due to reduced holding costs. The gold-silver ratio, which measures the value of gold relative to silver, serves as an indicator of each metal's relative value. When the ratio is high, it suggests that silver is undervalued compared to gold. A low ratio implies silver is relatively overvalued. Presently, the ratio stands at 81.1, slightly below the 5-year average of 82.6, suggesting that after its recent rally, silver appears overvalued compared to gold. Rafi Farber emphasized the value of holding a diversified position in precious metals, assuring his followers that they shouldn't be overly concerned about short-term fluctuations in gold or silver prices. He recommended a balanced approach, advising against an all-in strategy on gold. Instead, he encouraged staying liquid and retaining some holdings in dollars to maintain financial flexibility. Now, let's redirect our attention to a video.
It's a double-edged sword when you talk about premiums. Because on the one hand, you could say premiums are very low, and therefore we're not in a bubble because we still have the retail the retail buyer to come in, and they haven't come in yet, so there's more fuel. On the other hand, if you look at the premiums in 2010, 2011 for silver, junk silver, like the quarters, dimes, half dollars, those kind of 1964 and earlier, they were actually below zero. Right? It means it was cheaper to buy physical silver from I don't know specifically Miles Franklin, but a retailer in a coin shop than it was to buy SLV. Briefly in 2011, like let's say when silver was like going from 40 to 50. So for like a few months in that time span, it was cheaper to buy physical coins. That's a sign that silver was in at least a derivative based bubble, right? It was the hedge funds and whoever buys ETFs and futures, they were chasing the silver price higher, or they were caught in some kind of spiral, and it wasn't being reflected in the physical markets. Now, premiums are low, but they're still positive. It's still, it still costs a premium. I think it's like 6-7% for junk silver, which means that there's still some demand in physical markets. So it's not like buyers have totally given up and they don't even want it, right? Which was the case in 2011 briefly. When do the retailers or the stackers come in again? I think when the next printing round starts, right after this is going to be after the next repo crisis, and the Fed's going to have to say, look, we're going to have to cut back down to zero, or we're going to have to cut 100 basis points overnight, something like that. I think then the premiums are going to start to rise again, and people are going to start really getting nervous about the dollar, and who knows where we're going to be with the elections, or if there's going to be court cases and riots in the streets, and where the Middle East wars are going to be. It's got to come to a head, and silver is going to be a big part of that coming to a head. You want to stock up on gold and silver, and the way to not be worried that, well, what if that's not right? What if silver loses value? What if gold is we just agree on the value and we don't agree on it anymore, and it's not much? No. And it doesn't mean you have to convert everything into gold. So that's crazy too. Like, you need to stay liquid, you need to stay in some amount of dollars. But I'm trying to keep people emotionally balanced. Really, I'm trying to keep myself emotionally balanced, and that's how I do that. Is I communicate what calms me down to other people. That's how I can maintain my positioning here, and no gyrations in the market are going to scare me out, right? And I'm not going to be irresponsible with leverage, and I'm not going to play crazy options with huge amounts of dollars. So that's what I encourage my subscribers to do. And the more you read me, the more you'll be okay with it, and realize that we're all onto something. Follow me, you'll be okay.
Gold's status as a safe haven asset is drawing renewed interest as geopolitical tensions intensify. Despite challenges from a strong U.S. dollar, which usually raises costs for global buyers, gold prices are approaching record highs. Investor caution around the upcoming U.S. elections and rising conflicts in the Middle East is boosting gold's appeal as a hedge against market volatility. Similarly, silver is capturing attention, supported by anticipated U.S. monetary easing and China's economic stimulus, with projections suggesting it could hit $45 per ounce by 2025. What role do you think global events like U.S. elections and Middle East conflicts play in driving gold and silver demand? Feel free to share your thoughts in the comments. If you found this content helpful, give it a thumbs up and remember to subscribe to stay updated. Thank you for being a part of this journey with us.